Forex.Today. How you doing, huh? I believe it's a Wednesday. That means oil inventories. That means Canadian dollar. So, once again, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, however, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a foreign exchange brokerage service, and we'd like to earn your loyalty and respect, and one day become the prime broker for your successful Forex trading business. I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Except for the first Friday of the month, I am at fxstreet.com, where I host Trade Non-Farm Payrolls live for about 12 years, 10 years, 11 years. But I've been doing webinars there for 12 years, something like that. So these sessions, I am your humble servant. You are the boss. So please ask questions, get involved. So let's go through. So we got the snap election information yesterday right through in here. Boy, oh boy. If you were already on it, you got paid. What if you weren't on it already? Well, then you got lucky, right? What if you were trying to swing it earlier in the week, noticing that pound yen had already fallen down into the projected low for the month? It went a little bit lower for a few hours, but generally, so let me mark this. We're in the month of April, and that's this area here is the projected low for the month. Okay, oops, don't want to do that. Okay, there we go. And the beginning of the month was here. Okay, so when we started this trip up here, let's mark that. This is the first day of the month. Okay, on that day here, the projected low was here. What an amazing coincidence, huh? Now, for that to be the low, what's the projected high for the month? No, if this is the low, what's the projected high? Not M4. Yeah, Ryan's got it. 139.24. This is the projected top. M1 to M3. This is the bearish range, if you will, bearish monthly range. Amazing coincidence across the board, huh? And so, you know, whenever the snap election was, maybe it was down in here. I don't even remember anymore. I was in the shower actually when it happened. But It was funny because I was in the shower when they finally announced Brexit, but anyways, yeah. So if you had made this move, right? If you had made this move earlier in the week, you got lucky and you got paid, and sometimes it works that way, and sometimes you'll get unlucky, right? And also, oh, did you say 39.24? Oh yeah, you know what? I looked at it. It's like maybe it changed. I swear I looked at it and saw the number you posted. Huh. Anyways, no, it's not 39.24. Yeah, 140.10, right? It's weird. I swear I looked at it and you were right. Yeah. So anyways, all right, going back to that, you can even include it as a psych level, right? But if you happen to be bullish, so last week you say, okay, it came down, it hit the projected target for the month. Maybe I'll trade it back the other way. And that would be ideal if you're a bull, right? If last week hit the projected bottom, you could say, well, a lot of the bears are going to take profit, right? So if you happen to be a bull on Monday, what's the buy zone? You're going to love this, of course, right? Well, it's not even right in that area. This is that area right there. This line, it's actually like one pip below the monthly pivot. That's the M2. This is the weekly central, as you can see. So this whole area here, if you're a weekly swing trader and you're bullish, which took some basic analysis, that's your buy zone. What? It's quite remarkable, isn't it? It's only remarkable if you happen to be a bull. Everything else here, I think, is nonsense. It's just nonsense. And this is the Kool-Aid that the amateurs drink, right? And maybe they try to get on this after the fact, which you can if you're skippy scalpy, uh, but it's not how a career is made, right? So you're grabbing all these 1 minute pullbacks. Up, 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 down, down, buy. Up, down, down, buy. Up, boom, 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 down, buy. Uh-oh, range finally breaks up. Okay. Now, just in case you're not sure how this works, higher high, where's the new buy zone? Richard says in the middle, or 382 to 618, which is also, but Peter then says roll reversal. That's really what I'm talking about here. We're just talking about price action. So this old high becomes the potential buy area. Okay. Makes a new higher high. Where's the buy zone? Right here. Right. Makes a new higher high. Where's the buy zone? It's a big expansion. What do you do in that situation? Yeah, same thing. Right. And then do we get a new higher high? No. And was that predictable? Was this failure to make a higher high predictable? How about a question mark then? Yes, Peter's got it. The 786 does predict the failure to make a high. That's where you start thinking double top. Remember? And then breakout and continuation, right? And if this does make a higher high, scalpers, then this here is your buy zone. Not now, but let's just assume it heads up, right? And then comes back down. Somewhere around here would be your buy, right? Now the funny thing is, years and years and years ago, before I traded a 1 minute chart, I was told, in fact, it was common knowledge. Everybody knew that 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 trading the 1 minute chart was impossible. You just couldn't be profitable because it was noise. Does that look like noise to you? That at any moment it could just as well collapse and make a lower low as make a higher high? So one of the things I do in here, though, to manage all that, because I do believe it. So I spent a year trading the 1 minute chart. I did all right. But one of the things that I think need to be done here, because I hate, adding and then have it come up and you're up 12 pips, and then it comes back down, and then. So what I typically do if I decide to be a buyer, you can see it's bouncing off pivot zones, right? This is a moo trade. It's a weekly moo, not a daily moo. But anyways, you buy the dip and then 25-25 OCO, and then I don't watch it at all anymore. This would probably take me out, and then maybe I decide to buy another dip. So I buy it 25-25 OCO, and I walk away. I come back, I'm like, oh look, I got that one. But I, because have you ever seen Harry Potter where you sit in front of the mirror and it shows you whatever you want to see? Harry Potter sees his dead parents, and the old wise wizard finds him there, and he says, that men have wasted their entire lives sitting in front of the mirror. Well, you could spend your entire life sitting in front of this 1 minute chart, right? So what you need to do is throw down your trade and walk away and escape. Because the sad thing is you could sit here scalping this pound yen for hours, make money, lose money, break even, and then miss lots of great swing trades where you could have made just as much money with 5 minutes worth of work as you did with 5 hours worth of work on this thing. But nonetheless, it can be done. And this will be, in particularly, this will be important when we move into rabbit season, because I'm already sensing that the deer herds and the caribou herds are thinning, Pretty soon we're going to be left with rabbits. Oh, what's a 25-25 OCO? A 25-25 OCO is a trade that has two orders attached to the trade. One is a profit order, one is a loss order, and if either is triggered, the other is canceled. So the two working orders have an instruction attached to them where one cancels the other. And that's what it's all about. Yeah, totally. But a lot of these things mean very little to you newer traders. But back in the day, like 100 years ago when I became a trader, all your orders were manually entered. You didn't have charts. So if you made a trade, you couldn't see your trade on the chart. So you had a chart to do your analysis, and then you had your trading platform, which had your trades. You know, and if let's say you had 35 trades open, each of them had stops, but some of them also had limits. Those are also on your trade platform, right? Well, let's say you had 33 trades open, and each one had a working order for a stop and a working order for a limit. You have 100 orders. You understand? And none of them you can see on your chart. So it was very easy for you to enter in an order and say buy here, here, and exit here. But if your stop loss got triggered, so you got taken out of the market, you still had a limit order sitting in the market. And even though your trade got taken out, if you left the limit there and then price went up and touched your limit either today or overnight or tomorrow, that would execute a trade. So it was not an uncommon problem to log into your trading account in the morning and see a trade that was like a huge mistake. And you're like, what the F is that? And you look at it like, I didn't do that. Who the hell would sell a pound yen in an uptrend? And then you call the broker and he's like, well, I see yesterday you were doing such and such a thing, and then you got out with the stop loss, but you also had a limit order in the market that you didn't cancel. Oh, and you could ruin a good week or a good month waking up and finding out some order was executed that you had no intention of executing and it was a mistake. So that's why you use things like, child and parent pairing of orders, like an OCO. And, and now it's easy. Walk into Forex, it should just be easy compared to the old days, right? My grandfather plowed the fields with his bare hands. It was hard work back in the day. One of my father's favorite pictures of Canada is a small town in Saskatchewan, which is wheat country in Canada. And it showed a farmer behind a plow, and he was tilling his field. This just big, vast openness of flat nothing was his field. And it was being pulled by 12 women strapped to the plow. Dude, and you think Forex is tough. Seriously, wow. What a pampered, sheltered life, huh? We complain that this is a tough gig. Oh my God, seriously? This is tough. This you find this tough. Wow. Right? I think every once in a while when you look at what life can be like, you need to fight harder, my friend. That's all I'm saying. Yeah, but Richard says it's because most people lose. It's because they're doing all the wrong things. You know, and one great example is I've been coaching Forex traders now for what, 13 years, 14 years, I don't even know. And almost nobody listens to me. Yeah, you come to the webinars, like, yeah, he's a funny guy, he's a fun guy. And then we do support and resistance, we do pivot points, and I give you things that you should do, like, hey, why don't you get out a piece of paper and do some bullet points on why you should be a bull or a bear on a particular currency and all this kind of stuff. And everyone's like, that's a great idea. I'm totally not going to do that, right? And it just gets back to like, let's throw down a bunch of trades, man. Let's just trade our way into success. Boom, 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 boom. I just bought the Kiwi dollar, right? And it's closer to like Call of Duty, right? It's more like a video game. Let's throw down a trade here, let's throw down a trade there, and let's let's go for it. But we know that that's not how you get better. It's like, like my father golfing 3 times a week and expecting to be a better golfer, right? He was probably a better golfer 15 years ago. So, it's like, wow, if golfing 3 times a week doesn't make you a better golfer, how do you become a better golfer? Right? So this is what I told him. Play an entire round with a 5 iron. Tee off with a 5 iron. Hit your second shot with a 5 iron. Hit your approach shot with a 5 iron. Chip with a 5 iron. Do that for a while and you'll become an expert with the 5 iron. You'll be able to say, well, I wouldn't actually play the shot with a 5 iron, but maybe I'll hit it low. I'll hit it low, lower than normal, and let it run down the fairway. So in that case, I'm going to have to line up a little bit differently and change the trajectory of the flight, right? So on and so forth. You know what I mean? And then when you chip, you're like, wow, this is not the club I would chip with. But, and what happens is after a while, you master the 5 iron. Or you go to a real practice facility and you use a gap wedge and you just practice chipping and chipping and chipping and chipping days and days and days, like until your fingers are bleeding, chipping. You could flop it, you could bump and run it and stuff, but you're so laser focused on one thing, right? Yeah. So, anyways, you need to break it down into very, very small, very palatable, very specific pieces and master something. You understand? Just trying to do everything. You should just master something. What would you like to master first? And I've always suggested just support resistance. Because at the very least, you could just sell at resistance and buy at support, right? At the very least, that's where it starts, right? And part of support and resistance, like we talked about yesterday, has to do with price action, which is cool. Another part of support and resistance has to do with the market, which is pivot points. So that's where I would start. And then actual price action, right? Where, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This should make a higher high, right? This should be a higher low, and it should produce a higher high. And if it doesn't, then we may have a change in trend from lower low, lower high, lower low, lower high. You should master that. That would be the second thing I would master. And if you got those two down, then you should master your runway walk. And sachet. So yeah, what? So actually, maybe put this down. Think about it over the weekend. What would you like to master? Okay, and that's an easy thing because now you could focus on it and master it. And you could let's say you wanted to. Well, no, okay, let's just go that. You master something, whatever it is that we're doing here. You master something. Find a very, very small piece of the puzzle, and then be willing to put like I said, I traded the 1 minute chart for a year. Yeah, you understand? Like seriously, that's what I did. For example, with the 1 minute chart, that's very specific, isn't it? I'm going to master the 1 minute chart. I'm very confident with the 1 minute chart, but it's because I've earned the confidence, right? So what would you like to master? And then the second part, like we talked about this 2 or 3 days ago, um, just sort of getting the language of the industry and sort of the overall broadness of the industry. Um, spend at least an hour a day for the next 6 months just watching financial TV like I have up above me and take notes. Like it's not just entertainment. You're not like going to the gym and you're running on the treadmill and listen to CNBC. No, 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 no. Taking notes. It's like going to school, sort of. I spend 40 hours a week studying. So I'm saying like spend an hour a day, right? An hour a day, like, oh my God, you don't have an hour a day? Then wake up at 4 in the morning. Like just make it. Make an hour a day. It's so easy. Okay. So watch with a pen and a paper. Do you see how that's different than just sitting there, staring at it, right? Pen and paper, look for themes in what the guests are discussing, write down things that you don't understand, write down things that you think will affect the Forex market, write down things that you would like to research further, right? So, the CEO of BlackRock comes out today and says a few things. What does it mean? Jamie Dimon from JP Morgan says a few things. What did he talk about? What are the interesting things? What is the overall theme going on right now? All these different things. What's the sentiment in the market? Where do they, the Trump reflation trade, and then that's coming down. What are they talking about? This, central banking policy, like, oh no, there was a 63% chance the Fed was going to raise interest rates at the next meeting, but now it's dropped to 40%. Why? What's going on? Why has that changed? How did that affect the market? What's happened to the US dollar since that's happened? Why? What? And just write it down. What if you just did those two things for the next 6 months? master one thing technically, and broaden your overall sort of macro, if you will. It's not always macro, but just general industry knowledge and language over the next 6 months. Those are investments, I believe, into moving into the right direction. Because remember, the hardest part of what we're doing is reprogramming your brain. What happens to almost all amateur traders based on the statistics of trading? Okay. Okay. So if if the success rate is less than ideal for you, do you want to do what everyone else does? You see where I'm going here? It's almost like the definition of insanity, of doing the same thing over and over and over and over and over again and expecting different results. Well, what if you just do what everyone else has done over and over and over and over and over again and failed? Oh, but you're different, right? Isn't it funny how we all think this way? We're all above average, right? Isn't it true? All of us here today are above average, right? But that's the weird thing, right? So we're all above average. We're all special. We're all going to be successful, even though everyone else fails. And we're going to do the same strategy that everyone else does when they fail. But we're different, right? We're preordained. It's divine intervention. The Forex gods are just going to reach down from heaven and bless us because we're special. It's great, right? So therefore, here's where I started, like my mental attitude, my positive mental attitude. When I first started, I will do whatever the vast majority of people are unwilling or incapable of doing, and I will do that. Right? And you know the stories. I went on business planning retreats. I kept detailed journals. I did pro forma cash flow statements 3, 4 years in advance. And these had huge impacts on my trading career. But like people don't do things like this. They'd rather trade, throw down a bunch of trades. They'd rather go golfing. Golfing is a lot more fun than getting good at golf, right? So find out whatever is too difficult. What percentage of amateurs are managing $1 billion portfolio? What percentage of amateurs are writing out investor presentations that explain why they're bullish or bearish on each individual major currency? All G20 currencies with 3 month, 1 year, and 5 year outlooks for each and every one of them. Well, nobody. They don't do it because they're incapable or unwilling to do the work. That, my friend, if you do that for the next 5 years, once again, amateurs, the 95% that fail, are unwilling or incapable of making a 5 year commitment, right? But if you did that for 5 years, I believe you have a better than 5% chance of succeeding. Do you understand? I know you understand. Why do I ask? Yeah, you do understand. I know you understand. And here's the frustrating part. Well, I'm not frustrated by it anymore. I used to get really upset about all these things, but after all of that, I still know that the vast majority of everyone that just listened to that message will still not do anything different. And I'm like, well, zutele, what am I going to do? All right, so put you into a trade, I guess, huh? Find you a trade. Come on, Wayne, get me a trade. All right, well, let's go get you some trades, right? But see, the more I get you trades, the less likely you'll ever trade for somebody else. That's why I try not to go there. If you want to be successful, then that's something you need to be able to do for yourself or for your clients. But anyways, let's go into gold. Okay. Now, I believe yesterday, right, we talked about this ginormous skyrocketing gold into the projected top for the month, of which part of this is a cluster. And this has a high probability of maybe not falling, but having much more difficulty going up, right? Like we're nearing the top, so to speak. So the question is, is this an important change? Is that a change in trend? Will that predict a lower low? Well, maybe. Okay. Nothing here on the weeklies to really help. So it just kind of feels like consolidation. You got to mark this area here, right? So gold is feeling heavy. Gold is feeling toppish. I could remember everything. I can't tell it's true or dream. So we never got past the R. That's the R1 last week. Okay. A bear would sell here in this area. A bull would buy here. Yeah, here. So it comes down to who you are, what you want to do. Sometimes, because this is an R, you might play the S, but that just predicts a range. So if you're playing the S down here, then that just predicts this coming back to R. So it just depends if you believe it's going up or sideways. Okay. Now today is Wednesday, and we have oil inventories coming in at 10:30 a.m. Eastern time, which should have an impact on whether this goes up or down today. It's already oversold, and it kind of would like to go up. But if you're a bear, you're probably looking to sell it at the weekly central. Okay. As a bear, you're thinking something like this and ending the week down here. Okay. Then a bull, if you're a bull now, you're thinking probably like this. Okay. Richard thinks gold will go up. What do I think? Okay, let me go back to gold. So maybe I wasn't that clear. Um, there's no reason technically it should go up I mean it can. I shouldn't say that. Okay. Um, if if I was a bear on gold, I would sell the heck out of it up here. Okay. There's one opportunity. So if it did go up, that's what would happen there. A lot of bulls would take profit, and bears might actually drop a bomb on it. Okay. But could this try to ride the 21? Could it try to make a higher high even though it failed last time? See, that's the other problem, right? You're like, well, it should go up, right, Wayne? Why? Why would it go up? It's made a lower low and a lower high. But, maybe it's range bound. Maybe it just comes down here and tickles that. Okay, fine. But if gold does this, then I'm going to bring it up here, and then I'm going to sell the heck out of it up here. Okay. But let's just be factual about it. What do I think? I don't think anything. Okay. I don't think anything. But technically, it was supposed to make a higher high, right? And it should have stayed above this. But now we're down here, basically, right? So I don't know. No, it doesn't look that good to me. No. But even if it did go higher, it just makes me more likely to sell it. I don't know. I know that's a hard thing to grasp. If it goes up farther, then I'm going to sell it. I don't want to sell it now, But so that's because I sell at resistance, right? So what are my. So I reckon gold will go up. Um, I'm not sure what reckon means. Like a wrecking ball. Um, but I'll tell you, if it makes a lower low, I'm gonna sell the lower high. And if it goes up to the projected month target, I'm going to look to take profit. Even if it squeaks up here a little bit and then comes back down, I'm okay with that as well. Okay. But buying right now in the consolidating market, it just seems really late in the game, especially since we're in the monthly target. Like, I don't know, maybe this part isn't clear too. This area here, which I'm sure we've talked about this week, last week, and the week before, is the projected high for the entire month. So this is where you're supposed to get out of gold. So maybe that part we need to make sure is discussed out loud, Richard. Like, you're not supposed to be buying it here. I guess that's why you don't even hear me talking about buying it. You're supposed to be getting out here. And I think we were even talking about it last week when this spiked up. I'm like, yeah, well, I don't care. It's fool's gold, right? Why would you buy it up here? Oh, well, gold spiked. Yeah, to the target where everybody is getting out. So think about it. If you're buying it when everyone else is getting out, you're the liquidity event. You're simply transferring your wealth to them, right? And that stuff bothers me. It just bothers me. So you'll find, Richard, that I have hard and fast rules only at certain points. And a certain point is like, that's the top, so I don't buy it. I can only sell it. I can sell it here. I can sell it here. I can sell it here. But no, I wouldn't buy it. Can't even think of it. It's not even plausible. It's possible, but it's not plausible. I wouldn't even. I couldn't put myself in a situation where I thought that was a good idea. Here's a situation where we blew through the pivots. So what? Okay. Now, I suppose if you wanted to, you know, like I was saying before, like a moo trade, but that's just not cool. Okay. Well, pound what? But you should be bullish on the short term, like we explained. Was it yesterday or the day before when the news came out that they're trying to build more certainty, right? And the market likes certainty. Okay. So if Theresa May is going to secure her position, then the market loves it. Now, if the election comes out and like perhaps May is replaced or May has less ideal of a position in her government. Uh, by the way, I hear so many people call her Teresa. You ever notice that, or is it just like? But I even hear the English people here say it that way. But it's not Teresa. It's Teresa. Sa, not za. Anyways. Um, yeah. So if they go through the June election and she's not in a better position, then the pound would come down hard. Susan. Well, I'm not a politician, Ryan, so I don't know what's going on. It's not my call. I'm just a humble currency trader. So anyway, so here's Euro USD, and I look at it and say, well, I can't buy it, so maybe I'll sell it. Okay. Once again, maybe the beginnings, right? A failed higher high, right? So it just depends on whether you want to call this a lower low, lower high scenario. I know this is difficult to see, but let's just do it that way. So someone must be planning on taking this down, but it's still quite aggressive because you can see higher high, higher low, higher high. It's still, on the medium term time frames. I wouldn't call it bearish yet, but that's a place where it could turn bearish, right? Looks pretty close to a 50%, right? Doesn't it? Now remember, a bull on euro dollar has long since already moved their stop to break even, and they're targeting way up there. They think it's on its way to like 110. Okay, and that's because they bought at the monthly M2, which is right here. Okay, so therefore their target must be M4. Okay, and therefore if that's the case, this gray area, which I've already drawn for you, is going to be their new buy zone to launch it up to the next level, which will probably happen late this week and then rally up next week. So you might be buying a dip on Friday, right? All right, so one pair you're probably going to watch closely today is Kitty Cat. Look at this, huh? Just all over the place. What a mess, huh? So what do you think? Is this a good time to buy it now? You couldn't pick a worse time to buy it. Okay, okay. Now the interesting thing, I know again, because we do this every day and it's unbearable at times, I know. But this is the buy zone for bulls on Monday, right? It's lovely stuff. Whoever's taken the swing course just must be loving it because there's been so many setups. So now, so imagine like all you had to do is get this right on Monday. Because you know what you can't do here is sell. You know you need to look for this on Monday. So if all you did was catch this area right, you were done for the entire week. And of course, if you got it wrong, your stop would be just below this, and so you would have lost, I don't know, something. But if you got it right, I mean, that's it, right? You're done. You're done for the week. So, anyways, no, you cannot buy it here. No, Pete's been, yeah, it's been good after the course. That's cool. But again, it's the ongoing potential I think is important, right? So this is just another example. Now, of course, if you were aggressively bearish on this on Sunday/Monday, you would have sold here and lost a little bit of money. Well, that's great. As long as it's a little bit of money, upside is significantly bigger than the downside risk. On the long run, you'll be fine, right? So, for example, if 60% of your trades are winners and your winners are 100% bigger than your losers, that adds up to quite reasonable profitability. And, right? You piche? Pound dollar, once again, we're in an area where I just cannot buy it. And as I pointed out earlier, uh, you know, your alpha, okay, your alpha would have made you hugely successful. If you're chasing price simply because it jacked like that, then you're not in control. That would bother me if I were me, right? I'd hate to be reactionary. Trying to get rid of this. Let's see where it is now. So the week before the giant move, do you understand that somebody with control and knowledge for the market bought exactly at the M2, which means they're bullish. It went exactly to the bullish target. And what do you think they did later? Right? Amazing thing is, the luck aspect happens when you're happens more often than not when you're going in the correct direction. Yeah, Peter, how do you trade it? Uh, Identify support and resistance, drop into the small time frame, catch the news as it comes out at 10:30. If there's a large buildup, oil will fall, oil prices will fall. If there's a large drawdown, oil prices will rise. You buy at support, you sell at resistance. It shouldn't be too much of a problem. Okay. You can see pound has been going up since March, right? Okay. Look at that. They overlap fibs almost perfectly. So if you happen to be a bull and you happen to constantly buy at support, so you would have bought at support here, but it didn't quite work out. Yeah, maybe you made 100 pips, but it didn't work out as much as you wanted to. Then you tried it again and it still didn't work out. Then you tried again, but this time it did work out. Then you tried again and then you got lucky and it went even higher, right? The thing is, you remained a bull, you remained a buyer of the pound at support, okay? Right? I believe it's when people change bias often, where you don't know tomorrow if you're going to be a bull or a bear today, right? You don't know today. I guess I should say it in English, right? You don't know today if tomorrow you'll be a bull or a bear on the pound or the Swiss franc or the dollar or the yen. And to me, I think that's the fundamental flaw. Well, I guess it is technically a fundamental flaw. Wait, it's just a flaw. You don't know what you're going to be doing, so I don't know how you could do that well. If you've ever played soccer, right? A team that practices together and practices plays versus a team of just random players, who's going to win, right? So it seems to me that you should have a reasonable idea of what you're going to do and work at those skills at getting really good at what you do. So, right. So again, let's end with like a basic question. Who's going to hire you to trade their money? And does that person want an expert? And if the answer is yes, well, what exactly is the expertise that you have? Right? So master something. Find something to become an expert at. So I'll remind you that I think you should find one very specific thing that you should work on for the next several months. It could be things like double tops and double bottoms, or if you took the swing trading course at FX Bootcamp, you just focus on swing trading. And I think that'll take at least a year because they're right. So someone said they tested back 2014 and they went back and got inconsistent results. Don't forget about the seasonality issue that we covered in the course. Okay, you can't just see the problem with back testing is you forget because it's not on the charts. You forget what week of the month it is, what month of the year it is. You forget things like what was the concern of the market with oil inventories? What was the concern of the market with falling gold? What was the concern of the market with the upcoming election? What was the concern of the market with the Fed changing its policy? What was the concern about the market on earnings? What was the concern about the market in regards to geopolitical risk? Like, was that when China was collapsing and China was adjusting the RRR, 8, 9, 10 times in the year, stuff like that? You don't, but see, when you back test, you don't have any of that knowledge. And somehow, we forget all of that and we think that all of this should work technically. Remember, technical analysis only helps you time the entry and direction, not even the direction, just time the entry of your positions. But it doesn't set what you should be doing. Peter says, yeah, it was a poor range for average daily ranges and stuff. Right. So you always have to realize that it's the market that is dictating the success or the lack of success or the less success. How about the amount of success? Okay, the beta is has a is directly uh, the beta directly affects the alpha, the return on the alpha, sort of, right? So that's a low beta year, right? And you've forgotten market sentiment and everything else that goes around with that. And you might just be throwing down swing trades simply because they're, certain pivots and stuff, and you've removed yourself from the actual reality. And you may not have made a lot of those trades back then with the knowledge you knew it then, but now you're blindly taking it because, well, this pivot's supposed to do that. No, 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 no. No, no, because now you're gambling again, right? Well, Wade told me to just sell this at this pivot and buy it there. Well, those areas become support and resistance if other market participants trade them, right? But by backtesting, you're removing yourself from the market and the market participants, right? So I wouldn't say 2014 is going to be like 2018, for example, or even 2017. So it's much more important to be ready in the here and now. And honestly, I think the trading's been fantastic um, since November. Fantastic. So go back to November and then watch these pivot points and don't stray too far from market conditions, right? Because that's really what we're trading, guys. It's not what what we think the pivots are telling us or what the MACD is telling us, because they're not telling us anything. They're just algorithms. What we're looking for is where would bulls buy? Where would bears sell? We're trying to figure out what the other human beings, and maybe the computers they program, in the market today and tomorrow are planning on doing. That's what we need to do. So, anyways, you want to talk about it tomorrow? Sounds good. So I got to go practice my radicals now. We should do exercises and yoga together as traders. Bend, stretch, reach for the sky, stand on tippy toes. Oh, so high. Oh, there we go. That was good. So, hey, peace on earth. May the pips be with you. May our profits be above average. Thank you for being part of my team every single day. I appreciate your loyalty. And thank you for being a client of Traders Way. We hope to make you happy. Cheers.